You say it's essential for market oversight, but don't the markets, the SROs and FINRA also basically have access to daily market data?
Not on a consolidated basis. So this was the problem after the flash crash. We have a market with
And how long ago was the flash crash?
13 years ago.
Okay, so we're talking about it, and so, but you could do a sweep exam if you were concerned about GameStop or Apple on any given day in any given year and get all the transaction data pretty much that same day, probably, if not overnight, right?
If we went back to pre-CAT days on the transaction, before we had a transaction database, it would take a lot longer than that to pull together. We don't even have the old OAT system. I know you're familiar with that. That's been decommissioned because of CAT. So the audit trail doesn't exist anymore that used to exist before CAT, at least parts of it.
So during a conference in October, you mentioned that even your 80-year-old mom information would be stored on the consolidated audit trail despite the absence of any investors being interested in seeing her manipulation of the broad market. So that sounds like it's got a lot of data that you don't really need to me.
That's a concern, I think, is did we strike the right balance? If we really wanted to go after, just sort of look for people who are able to move the market, large traders, that would be one way to scale back the scope of this database, just focus on large.
Would you support that if that's how it were scaled back? Wouldn't that be a fantastic way just to even use it initially instead of collecting all this data? I mean, the government does not have a great track record on maintaining privacy or stopping people from querying it or letting people string concepts together using big data analytics and exposing something that even you say is anonymous.
It's obvious that if you don't collect it, you can't lose it. But I think whether it's the large trader approach, or I think there may be some other approaches too that are worth considering. We're getting smarter about this as we go forward. But there may
do you have the authority to do that without Congress telling you what to do more directly?
The CAT LLC run by the exchanges and FINRA can engage with the SEC, but it would require SEC approval. That is, it can be done without the authority of Congress, but it would require SEC approval.
But you do think, I mean, just personally as the CEO at FINRA, that would be a much more effective, narrow casting way to
I would love to work with the industry and the exchanges and the SEC to shrink that database down and still try to achieve the regulatory objectives.
So quickly turning to Prometheum, which is the only special purpose broker-dealer licensed by FINRA. It's essentially a storefront with nothing on the shelves. It's been approved, but nothing's happening. Did you work with the SEC to approve that application, or did you do that solely inside FINRA in the normal process?
Well, it definitely followed the normal process. FINRA decides ultimately on the decision whether to accept the new membership application. This particular application, because it was under the SEC's special purpose broker-dealer no action letter, like other applications we've had for that type of stuff, there are interpretive questions. And so when we get interpretive questions about the SEC's rules, we talk to them about exactly what's required here. But ultimately, the decision is FINRA's to make.
I may follow up with additional questions. I thank the chairman for your discretion. Yield back.
Gentleman yields back. The gentleman from Massachusetts, Mr. Lynch, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Cook, you've established over at FINRA a crypto hub, right?
Yes, sir.
And you've got what they call a crypto asset investigation team.
Yes, sir.
Over there. So we, just recently we've had Mr. Changpeng Zhao at Binance pled guilty. I think he's paying a $4.3 billion penalty for violating anti-money laundering rules, and then we're waiting for the sentencing of Sam Bankman-Fried, who he built at least 1 million different investors and stole $10 billion worth of customer funds, and he just was convicted of 7 different counts of fraud, and he's facing, I think, jail time of up to 110 years. These are the 2 largest crypto exchanges in the world. Are there any lessons learned from those 2 cases? Setting aside the part that there are no use cases for crypto except for trading crypto. I'm just wondering, FINRA's core responsibility is to protect consumers and investors and the integrity of our markets. And I'm just concerned with the flagrant non-compliance going on in this space.
Well, thank you for that important question. And in part, the Crypto Hub and the Crypto Asset Investigations team and other teams within FINRA, the hub is to pull them together to make sure that we're doing that work effectively and that different parts of FINRA know what other parts of FINRA are doing. You asked about lessons learned. I think that there are probably many, but one of them is that the traditional rules around securities and other regulated products are there for a really good reason, to make sure that assets are safe, that their customers know who's using them and why. So as we go forward, I think those are important things to keep in mind. I want to point out that the SEC has provided some guidance that does allow some broker-dealer, a certain model of broker-dealer, to engage in crypto asset securities activities. So part of the Crypto Hub and the other efforts you mentioned are really to make sure that we're prepared as people apply, as they're entitled to work under those no action letters, that we're prepared to be able to properly supervise them and protect investors.
There seems to be I appreciate that. There seems to be a gap, though. So you have the ability to self-regulate members, right? But not affiliates. Is that correct?
That's correct.
So, Ms. Williams, I'm just concerned, let's say an affiliate of a covered, of a regulated entity melts down. We've seen what happened with, I think it was Signature Bank, Silicon Valley Bank, when there was a perception that the assets, and you talked about, the reserve reports, when there was a perception that the assets weren't as valuable as had been posted or reported. When those assets dropped, there was a run on the bank. All the customers started to withdraw their money, and there was a run on that bank. I'm just wondering, with crypto being so volatile, does that present a risk to our system internally, our banking system, our economy, if outliers, people not being regulated, if they crash and burn, can that come back on our banking system if people perceive that there is no strength and not enough assets in that bank to answer all claims?
Thank you for that question. So in June of 2022, the PCAOB put out an alert to auditors warning them of the risks that fluctuation in interest rates and volatility in certain markets could have. And we also have prioritized the inspections of audit engagements involving digital assets and financial institutions that may be subject to interest rate fluctuations, increased inflation, and volatility in digital assets. Those are all areas of focus for the PCAOB.
Great. And I'll just ask this, and I'll take the answer offline. If you could recommend changes to address the special nature of the risks that are being presented by a widening use of crypto, that would be very helpful to the committee. Thank you. Mr. Chairman, I yield back.
Gentleman yields back. I now recognize myself for 5 minutes of questioning. Mr. Cook, we've talked about the cat quite a bit already. And again, you were in comments you made in October at a conference that were a little critical, highly critical of the cat. And I understand you told my colleague before, Mr. Lucas, that the consortium proposed a fee allocation split to cover the costs of the cat. However, given your recent comments, who do you believe will ultimately pay for the cost of the cat?
Thank you for that question, sir. I'd be speculating a little bit, but if this fee proposal goes forward the way it is designed, there's allocation to the SROs, and then there's allocation to the members. I think in many cases, it's likely to be passed on if it can be. So ultimately, I think directly or indirectly, it's very likely that this will be paid for by investors and by others down the chain.
It'll trickle down and be passed along to the investors. That's what's likely to happen.
I would assume that's the likely outcome.
Thank you. In your view, does the CAT offer improved investor protection significant enough to warrant the ongoing expenses required to maintain this database?
I think that's an excellent question, sir. I don't know how we do surveillance today in this market where you got 24 different securities exchanges, you got lots of alternative trading systems, et cetera, et cetera. How do we surveil for misconduct across those markets without some type of audit trail to be able to do that? That doesn't mean that we don't have to be laser focused on costs. And so I think that's a really good area for us to continue to be focused on. But, the average daily trading volume in the US, $600 billion a day, that's a lot of money that's at stake here. So I think investors probably expect that regulators are looking at what's happening across the markets, and that's really the tool that CAT's intended to provide, the transaction database of CAT.